Hello, my name is Manny Kagan. I'm a mortgage master. I'm founder of Mortgage Solution Academy, and a very special guest today. His name is Ken McMaster, and he lives where?
I'm in Missouri.
Missouri. Wow, he used
Yes,
to be
indeed.
not far from Sacramento when we first communicated. And Ken is a very special person. He's a good friend, but at the same time, he has specialty which is very unique. He works for a company which provides fix and flip programs. Now, we first encountered each other when I had a client. It was interesting story because he is contractor and he wanted to buy house to live. And the only way I could help him at that time, if I would do fix and flip. In other words, he needed to come up with little down payment. I think because he's a contractor, he needed to have, I think, 10 or even 15%. And then lender would provide money to purchase this property. And then in addition to this, money to fix this property. Now, my concern was about his case. How can I get him takeout loan? In other words, if you have a fix and flip, expectations are that whoever is doing this project, they'll sell the property. He wanted to keep it. Well, I found the solution afterwards. And since then, we start working together. And when Kent moved to Missouri, he joined a company which is called Planet Renovation Capital. It sounds
Yes.
very important. Okay. And you are a subsidiary of some other company. What is this?
Planet Home Loans.
Wow, Planet Home Loans. Incredible. Sounds good. All right. I asked Ken to join us to share with you uh, what is it, this fix and flip programs, how they work and what they do.
Okay, well, Manny, that was a nice loan that we did for that contract. I'm glad
Wow.
that worked out
I
well.
remember, yeah.
Yes.
And those
Uh,
old days, yeah.
yes. So the fix and flip is really designed for investors, like you said. They're going to buy a property that needs, a significant amount of repairs, or not even that much in the way of repairs. But the idea is purchase the home, do your renovations, and then sell the home for a profit. Or in the case like you had, you will hold the house as a rental and we just do a takeout loan at the end. So you can finance up to 90% of the purchase price, and we will do 100% of the renovations get financed as well.
Okay, let me run with another story which I recently came across, and we'll use scenario to analyze it. I
Okay.
came across a property which is listed for sale. It's 2-unit building in Pacifica. And when I was talking with a real estate agent, friend of mine, who was sitting on Sunday in this property, he told me property needs some work. Well, I hear it. I drove there, and yes, it is really fixer. So next door neighbors wanted to buy it, but the price was reduced from 1.3 billion to 1.2, and there was an estimate in construction cost 190,000. When I look around, and I'm not professional, I said, okay, it'll cost more because you have to fix the roof, you have to clean the garden. So my estimate was about 250.
Okay.
Then I asked the question, how much this property can be sold when it's ready, or what's our comparisons? And comparisons were 1.5 million, which means that if they would buy for 1.2 million, if they will spend 200, let's say at least 200, 250, that means that its total expense was 1,450,000. If value of a similar property is 1.5, why to buy it?
Yeah.
So in my view, the property had to be sold for a million or even less to make sense for any contractor, because contractor needs to make money. Because
Correct.
when the people don't take into account, often it's not only construction costs, it's carrying costs. Because when you have a mortgage, you have to pay every month or accumulate certain amount of money. So this diminishes your returns. You have to sell it. There is a real estate agent fees. There is a transfer tax fees. So property have to have enough cushion to enable to make sense. And then in addition to this,
Correct.
lenders make those loans, they use 75% of future value to calculate how much loans they can give you.
Correct.
Correct? Okay.
Correct.
Okay. So what's happening now?
So on that particular scenario, I'd agree with you. That's not worth it. They may end up actually losing money if they go over budget on their construction, and then the carrying and selling costs would probably not make sense. So you would reduce you'd have to get a reduced sales price or cut some price on the renovations that you do to make it make sense. Because if it's only going to go for $1.5 million, we're only going to finance a maximum of 75% of that, including the purchase price and the repairs.
Yeah. So in other words, since we are getting this program for real estate agents, I want you to share with them what do you think will make sense for them to look for?
Okay. What makes sense is a property that's, you really have to look at how much work needs to be done and once that work is done, how much it's going to be worth. When you're working in your market, Manny, with, values in the millions, you got to decide how much profit you really want to make. Because if you make $100,000, that can only be, 10% of the sales price.
Well, if
Which
you're a contractor and let's say it will pay your salary or your earnings through the year, maybe it's worth it.
yeah, it might be worth it. But then you just have to figure out how much you're buying it for and how much you're putting into it. So if you were to buy it for $1 million, and let's say you put 10% down, that's $100,000 down, and it's going to be worth $1.5 million when it's done, and you got 250,000, you're at 1.35 million that we're going to be lending you. Is that even going to work?
Probably
Probably
not,
not. So
because you divide by 0.75.
yeah, if we take,
It has to be appraised at least 1.6, I think.
yeah, 1.5, 0.75, we're only going to lend you 1.125 max. So you're going to have to come out of pocket with some of the repair cost.
Yes, yes. So, but you mentioned 10% down. Can you still make those loans with only 10% down?
Yeah, you can. And
Really?
we allow 10% down on the purchase price. And that's if you are an experienced flipper, meaning
Uh-huh.
you've done five flips in the last 3 years.
So in other words, it has to be a contractor or somebody who really
Somebody who does
it.
that for a living or has done
Yes.
multiple projects. You don't
Ah,
really have to be a contractor to do it.
yeah.
And then if you're, if maybe you've done 2 or 3 in the last 5 years, we'll give you 85% of the purchase price.
Then you
And
need to
if
have
you're
15%.
correct,
Yeah.
correct. And
And
if
how
you're,
much income do you need to show to qualify for those loans?
there's no income qualification. We're
You must
essentially
be kidding. No
no,
qualification, no
no income
ratios,
qualification.
no.
We're no, none of that. We're underwriting the property and your credit and your asset profile is what we're
As
looking
that's
at.
it.
That's it.
And money for down payment doesn't have to be seasoned. In other words, it has to be clients' own money, or it can be gift or something else like that.
We just have to know where it's coming from.
So in other words, if somebody puts in account money, or let's say there's a partnership.
Yep.
Sometimes the real estate agents go, and I know someone's particular, go into partnership with a developer,
Yep.
contractor, and one puts money, another puts labor, and it's become a successful operation.
Correct.
You just
Correct.
have to find the right property for right price.
That's also very correct. Although it seems to be getting a little bit easier to get a good deal on those fixer uppers these days.
Why?
It seems that the market is losing a little steam and there's less buyers in the market. And so the ones that need work take a special person to buy these days. And that somebody has to have the vision and to know what it's going to be worth when it's done. So the properties that are, need work, they're not getting as hard of a look as they used to.
I see. Okay. So in this case, and how do you do appraisal? What's a appraisal process?
We do a regular appraisal, but we need the contractor's bid for the work that's going to be done to
Mhm.
send to the appraiser as well. So he's going to give us an as-is value and an after improved value.
In other words, let's say use the example of 1.35.
Yeah.
And if you divide it, I don't have calculator handy. If you divide it by 0.75, oh, actually, I have it here.
Okay.
Calculator, all right.
Wonderful.
Okay, I'm going to do the math. So if I'll have 1 million, so I have to delete this. 1,375,000. This is going to be amount of loan which you're going to give to a client, okay? And we divide by 0.75. In this case, property has to be appraised 1.8 million.
Correct.
1.83. So I was wrong. So in other words, if this case, if somebody wanted to buy fix and flip this level, it will not work.
Well, it would still work. We just wouldn't finance 100% of the renovation cost.
So in other words, then if client has extra money, they still can pull it through.
Correct.
Yeah,
Correct.
I think that our contractor had this case, which we managed to get him money. Okay,
Yeah.
it's very good news because I think that the market's softening now, and more buyers will be able to benefit from this. And what if person doesn't have flipping experience? You said they have to put down at least 15%.
That's if they've done like 2 or 3 in the last 5 years or 3 years.
If they have not,
If they have not, then we'll lend them up to 80% on one condition, and that's that we have to believe that they're going to be successful. And those people are people with experience in real estate, like real estate agents or lenders, like your firm.
I see.
Or
And I was
somebody that's working, that's a contractor or works with a contractor, something like that. So you're going to have something to make us believe you know what you're doing going in.
okay.
Even though
Let's
this is
look
your
at
first one.
practical way how to approach it. Let's say I like the property, like this 2-unit in Pacifica, and I'm negotiating with the seller and say, okay, seller, market is softening. You will not be able to sell it anyway. Why won't you reduce your price by, let's say, 100,000 instead of 1.2, 1.1? Okay.
Right.
They might agree to this because if they want to sell, if they're motivated. And then I have to find a licensed contractor,
Correct.
developer, somebody who knows what they're doing. And I think knowing what they're doing is critical because there's always overruns.
There certainly are, and we will need a bid from a contractor for all the work that's going to be done, so we can give that to the appraiser.
So it has to be firm contract. It's
Correct.
something. It's not just the flippy estimate, but you need to really identify good developer, good contractor who can really stand by their words. And I usually add at least 10% to whatever they say.
That's a
Because
good plan.
experience show me that 10 is even sometimes not enough. And
It
I
happens.
suggest,
It happens.
yeah, I suggest to add this 10% to their bid, whatever forms they can show it, just to be sure it's inside there, because when you finance, it's very difficult to finance afterwards.
Correct.
Okay.
Correct.
What else can you tell us about this wonderful program?
Well, we have a couple different ways to do this that are kind of nice. We can do for your buyers that, let's say you wanted to buy a house at an auction, or you wanted to compete with a cash offer or something like that.
Okay.
You can get your package into us, with your application, your assets, and your credit report, and we can issue a proof of funds letter up to a certain amount, meaning this is proof from Planet that you have $1 million cash that you can buy this house with, even though part of that's our cash. So we can go do that, which is helpful when it comes to competing against cash offers in the fix and flip world. And then we can have term sheets out within 24 hours to you, Manny, and you can tell the terms to the borrowers immediately. We can close these in as little as 7 days.
So what you're saying that if somebody considers something like this is what is called TBD, to be determined property?
Correct.
So now it doesn't have this specific property. It can be property in mind or the price range.
Correct. We can say your dollar amount is $1 million or 2 million or $1.5 million or $5, whatever the case may be. Hopefully it's not $5.
Well, whatever it is, but it's realistic numbers, which just to say, based on the numbers which you have in mind, because then I can calculate also monthly payments. So this brings to mind. So how much, what would be interest rate in loans like this?
Interest rates range from 8% up to 11%, and it really depends on credit, LTV, and your experience.
I see. Okay. It's
and
good
there's
to know.
Yeah, we set up an interest reserve account as part of our renovation cost. So the interest for 6 months is held in a reserve account and paid out monthly. So you're not going to get a bill for 6 months for the interest, which hopefully you'll have your project done within 6 months or close to it. So you won't have to make any
It's
payments.
wonderful news. I didn't realize this. And now clients don't have to dip into their own pocket.
Correct.
It's going to be financed, basically. You're adding this reserve account to your loan amount, and this is goes into general calculation.
Correct, and that's something we'll pay out of that account in interest every month as we go, so the client won't have another bill to pay.
And you mentioned 6 months. Is it only
That's
for
correct.
6 months, or loans are given for more longer?
The loan term, the initial term is 12 months. The interest reserve account is set up for 6 months.
I see.
Yeah, and if for some reason you go over, it takes longer than 12 months for, things happen, we can do extensions on it as well.
Yeah, I see. Okay, well, I think it's wonderful program, and especially now when market is softening, it's some real estate agents can partner with contractors, and then everyone will be happy.
Yeah, and the real estate agents, they know the market. We're happy to lend money to them.
Okay. So in other words, if real estate agents are involved in this transaction
Mhm.
specifically, but how would you know that real estate agents? Because since they will indicate an application with
That's
the art.
correct. That's
Okay.
correct.
Okay.
That is
And if
correct.
they will go with somebody who has experience, even better.
Yep, that's correct also.
I think it's a great program. Okay. If you have any questions, I'm more than happy to help you. And I promise then I'll help you. My name is Manny Kagan. Thank you very much.
Thank you, Manny.
Yeah, thank you.